Is the UK heading for a recession? After Donald Trump's tariffs came into effect over the weekend, stock markets around the world have continued to tumble, and it sparked fears that the world economy could be on the brink of a recession. This morning, the UK's FTSE 100 fell 6% within minutes of opening, after markets in Asia also saw dramatic falls. To help make sense of all of this and to explain what it could mean for you, I'm joined by the economist Fergus Jimenez-England from the National Institute of Economic and Social Research. Fergus, thanks for joining us. Another awful start to the markets today. Can you walk us through what happened this morning?
Well, the markets opened and reacted pretty much in accordance with what we expected, which is these tariffs have been really disruptive. They're huge news. As you said, the FTSE 100 is down by 6%. The S&P 500, Dow Jones and Nasdaq are all tumbling in the self-branded Liberation Day aftermath. And the VIX, which is a measure of financial volatility, is at heights that we haven't really seen since the COVID-19 pandemic or the global financial crisis. So it's quite difficult to understate just how disruptive these tariffs have been and will continue to be for the world economy.
Look, every day recently we've seen all the markets drop by percentage points. How low can the entire global stock market go? And in your opinion, are we heading for a recession?
I mean, the financial distress that we're seeing, I expect, won't be able to really peter out properly until we know how other countries are going to respond. So far, we know that China is intending to retaliate to what the US has done. But we're still yet to see what the EU and even the UK are going to do. Preliminary numbers from NISA suggest that GDP growth could be lower by about half a percentage point this year and down by 1.5 percentage points next year. This means that next year we could be looking at recession territory. Yeah.
OK, so those numbers you've just mentioned, 0.5% might not sound like much, but in terms of the impact on our economy here in the UK, what would that look like?
It's pretty huge. To put it into context, a lot of industry kind of expectations for this year were GDP growth between about 0.75 to 1.5%. We're looking at basically GDP growth being cut in half for this year, which will basically mean higher unemployment likely. And with that, you've also got inflationary effects coming from second round mechanisms due to tariffs. So we'll see higher prices, higher unemployment, and potentially higher interest rates should they cause a response from the Bank of England.
So you've kind of touched there on the impacts that people at home will start to feel. It's already, even just in this short space of time, affecting people who've invested in the stock market. When can we start to see plummeting stocks affect our day-to-day costs?
So like with any kind of other fiscal kind of tax spending policy, it takes some time to transmit to the real economy. It should definitely be said that financial market turmoil is really just the beginning. Real economy implications might take as long as a year to transmit, but they will transmit. And in seeing that, yeah, as I say, you'll be seeing higher prices potentially due to exchange rate effects, even though American consumers and businesses will be footing the bill for these tariffs. There are supply chain disruptions and exchange rate effects that might occur, making everyday spending, everyday goods and services for people more expensive and mortgages potentially harder to finance should interest rates stay higher for longer.
I mean, how long can the markets keep dropping at this rate?
That's really difficult to say. As I said, these markets are responding to a time of really high uncertainty. So naturally, you'd say, well, as soon as certainty is provided, again, I think that's a lot to do with how other countries intend to respond. But also it goes back to whether we think the Trump administration will be making any fast amendments to their policy. At the moment, it's not quite clear what they're planning on doing. And so the markets do seem to be in somewhat of a free fall, which looks pretty bleak.
Well, look, this all came as a result of Donald Trump's trade tariffs. He's still pretty bullish on this. Today he said sometimes you have to take medicine to fix something. Is he right?
I mean, in the sense of his policy, I think the policy prescription insofar as that medication is completely wrong. I think that these tariffs are broad and blunt and not really the kind of targeted, calculated policy that you might deploy should you want to do things like protect domestic industry. There is a role for any kind of policy tool, but the role of tariffs and the way that Trump has deployed them is certainly economically incoherent. Politically, who knows? But yeah, it's not clear to me that, for example, trade deficits in and of themselves are a sign of exploitation of the United States, but Trump seems pretty convinced that they are. So,
I mean, you mentioned before that essentially these decisions taken by the American president could potentially, in a year's time, affect economic growth in the UK. What can our government here do to protect our economy from the decisions made in the White House?
it should be said at the start, I guess, that before Trump's tariffs were announced, we had the spring statement. And I think if we were to take the economy kind of as a snapshot before all of this tariff madness happened, it wasn't going to be particularly easy for the government to navigate through the economy anyway, because we've got some binding fiscal rules and also some really quite demanding expectations that we've put on the government's spending plans. So I think that the government right now, the best thing that they can do really in a time of trade fragmentation and financial fragmentation is get closer to whatever trade partners they can. This includes the EU. I've heard a lot of stories being floated that, you know, a big advantage of Brexit was that we get a lower tariff rate than the EU. But ultimately, Brexit, you know, there's been analysis done at NISA to show that Brexit has hurt productivity and growth through actually non-tariff barriers and border controls. And I think it would be wise for the UK to foster as close trading relationships as they can with whoever they can, really.
Well, on that point, if you take away any ideological issues, is the best policy here, financially, economically, to just cozy up to the US?
Economically, I mean, with economics, it's a case of, you know, there's a trade-off. We have resources to use, diplomatic resources. I think one big question is, can the UK make a convincing case that they are worth excluding from the 10% tariff lower bound? And if that isn't true, do we risk cozying up to the US, potentially alienating other trade partners at the same time? Economically, we said without political ideology, but ultimately, economically, this is an expense of resources, it's an expense of time, and all the while, you're seeing the real economy really suffer. So they're kind of intrinsically linked in that way, but I think, yeah, the UK would do well to potentially look in both directions and kind of see what pays off.
Will all major economies be equally affected by this?
No, not in the sense of, you know, it depends on the degree to which each economy really relies on imports. I think major economies and their kind of the way that they will be able to recover from this kind of shock to their trade really depends on their supply chains and the share of imports that are occupied by US goods and exports likewise. I think really we should be looking at developing economies for some of the potentially hardest hit economically, because their exports are really, really bolstered by trade by the US.
We've seen stock markets in pretty much every area drop dramatically over the past few days. Do you expect that to be even across all the different stock markets, or are some more vulnerable as a result of these tariff impositions?
It kind of goes back to whether individual stock markets in each country they're reacting obviously to the uncertainty brought on by Trump's tariffs, but also to the exposure of their own markets and also what they think policy will do in response. I think it's really difficult to say the distribution across stock markets in an economy, a world economy that is so integrated. I think largely a lot of these stock market effects will be uniform in the sense that everybody is uncertain and everybody is very highly integrated. Beyond that point, it's a question of what those individual economies do in response and whether the markets, you know, show any mercy.
we're talking at high level here, governments and stock markets, but what can individual people at home in the UK do, if anything, to protect themselves against this global uncertainty, this massive drop in stock markets?
Insofar as what everyday people can do, unfortunately, it's not a lot. I think that, when we have these tariffs imposed, the key things that they initially affect are exports to the US. And domestically, we've got hikes in the national insurance contributions for employers. We've got high minimum wages and living wages. Firms' margins have been squeezed, and it's not obvious that they can go for much squeezing anymore. So we should be seeing potentially a decline in output and a rise in unemployment. And unfortunately, a lot of that can't really be insured against, especially for the average person.
Historically, at least, the stock market has eventually always risen. Is there any cause for optimism at the moment?
Yeah, I mean, the idea that the stock market continues to rise in the long run, I think it's unlikely that we'll see any kind of chronic downward trends in the stock market in response to this. But we could be seeing kind of a structural shift downwards, where we have persistently lower GDP growth by virtue of the fact that simply the world is more fragmented and less economically efficient, so to speak. I mean, in the UK at least, we can see that we expect that R star, the kind of inflation neutral rate of interest, has risen in response to this kind of global uncertainty and these now announced tariffs. And that is a permanent, at least long run fixture that will definitely impact the trajectory of markets, but maybe not the trend.
And in simple terms, what would that mean for people at home?
In simple terms, a higher R star or equilibrium rate of interest just means that we can expect the Bank of England to be having higher interest rates for longer and settle at a higher kind of equilibrium, which means that you'll be finding mortgages harder to finance, but potentially in the long run rather than just the short run.
So all still very unclear at the moment, which I guess is what's driving these problems on the stock market. Fergus Jimenez-England, thank you very much for your time.
Thanks a lot.